Guys, today we're going to talk about market structure, but more specifically, we're going to talk about swing failure patterns, what they are, what they mean, how we can trade them. The first thing we're going to talk about very briefly is market structure. For those who don't know, which you should, this is like trading basics, but market structure is king, as they say. And this is actually true. A lot of the things that they say I shit on, but this is true. Market structure is king. And the reason why is the market's always going to be trending in a direction on some scale, okay? On some time frame. Market structure essentially is when price is making a higher high, higher low, higher high, higher low, higher high, higher low, right? Alternatively, it is when it's making a lower low, lower high, lower low, lower high, lower low. This is market structure, okay? Now, this is important because it tells us the trend. And if you can't find it, if things are looking kind of like, choppy or whatever, go on a higher term time frame. There is always going to be some form of a trend. And the reason why is the price is never going to literally just do that. Unless your name is Luna and you went to zero and you're staying at zero until forever because you died and you suck and Luna sucks, but that's another story for another day. So now that we know what market structure is, very basic, we're talking about something called swing failure pattern. If you're from Jason's Discord, which a lot of you guys are, he calls it CDW, which is chickens drinking water. I do not call it that, but it stands for swing failure pattern. And what exactly is a swing failure pattern? So if we know that market structure is king, and we know that the market will put in, what is going on here? Okay, so we know that market is putting higher highs, higher low, higher high, higher low, higher high. The point in which the market starts to turn in the trend is our SFP or swing failure pattern. When we come and rise up to take this high and we are unable to take that high cleanly, that is when we have a swing failure pattern. Now I'm going to go into depth and I'm actually going to draw some candles out for you guys so you can very clearly see it. But in short, that's what it is. It's exactly what it sounds like in the name. It's a swing failure. We are failing to put in a new swing high. Let me turn off my trader's reality. Okay, so we're failing to put in another swing high. Now, there are methods to actually trade this. We've talked about a few things on my channel already, which kind of go hand in hand with how you're going to trade this. And the main thing is divergences. There's a way to front run it, and then there's an easier and safer way to trade it, and we're going to go over both of those ways. Okay, so the very first thing that you need to know is that swing failure patterns happen literally all the time, and they happen on various time frames. So depending on the time frame that you like to trade, if you're day trading, if you're scalping, doesn't matter. You can see these things like literally all over the place. And look at this right now on Ethereum. We had one earlier today. Actually, not even earlier today. This was like literally, 20 minutes ago. We had some crazy action. So the first thing that you're going to do is whenever you see a new high, you're going to draw a line, okay? You're going to draw a line just like this. Hit the magnet tool. If you guys don't know, when you're holding anything, if you hold down command on Max or I guess control on PC, it magnets. Little pro tip there. Anyways, so you're going to draw your high like that. Now we know that this is a swing failure pattern. For me, I like to label it just so it's nice and looks good. But this is a classic swing failure pattern. So as soon as you draw your line on the high, this could also be a swing failure pattern. As soon as you draw your high, we're waiting for that level now, okay? You can put an alert there, whatever the case is. Obviously, on the higher term time frames, things are going to take longer to play out, but they're also more effective, okay? So you're going to put your alert there, and you're going to wait, and you're simply going to wait, okay? What we want to see is exactly what happened here, okay? We're going to really zoom in On the 6-minute time frame, actually, let's go 5-minute. We'll make it easier for the people that don't have trading view and can't do the custom time frames. So what we're looking for is exactly what you see here. We want to see, in order for it to be classified as a swing failure pattern, we want to see, let me just make sure, yeah. We want to see a nice, strong rejection, just like we did in this exact instance. So let me clarify this, because this is very important. This is like what is going to objectively identify whether it's a swing failure pattern or not. We had price come and make its way up, and then price shot above that level. However, it was unable to close a candle above this line. So price shot up and very quickly rejected. This is considered a swing failure pattern. If this candle, I'm going to just draw it quickly, like, so oh my, why is it doing that? Okay, so if the first candle is like this, that's this candle here, and the second candle, or whatever, that happens, and then the third candle, doesn't matter which candle it is, but closes above the line, it is no longer considered a swing failure pattern, at least on that time frame. So this is the very first thing you need to know, is this is what has to happen in order for it to be considered a swing failure pattern. If it's not, then nothing else I'm going to say in this video relates. Like, it doesn't count as a swing failure pattern. Now that we know how to define it and what it exactly is, we're going to talk about how we can trade it and how we can know if we are going to, in fact, get a swing failure pattern. And we're going to stay on this example. I'm just going to draw a vertical line here so we can come back to it whenever. But let's jump down on the 1-minute time frame. So the way that you're going to identify your swing failure pattern is by looking for divergences on the lower term time frames. Guys, if you don't know what divergences are, I do have tutorials. And so they're on YouTube. Check out the tutorials. Also, come and join our Discord. We have an engaging group there, and we do the live streams that I'm doing right now is on Discord. So just make sure you go check out the content if you don't know what it is. But today we're not going to actually go in depth on what a divergence is, because I already did that. Okay, so when price shoots up above our level, we're starting to look for divergences. Here on the 1-minute time frame, you can clearly see already that we have divergences. Now, as I always say, the more divergences, the better in terms of money flow, momentum waves, and the VWAP, and also the RSIs. Actually, we need RSIs for this video, so let's turn our RSIs on. Okay. So this is the first thing we're looking for, is price to have a strong rejection, and we're looking for divergences, all right? Now, this is a 1-minute time frame, so it's not the best example because we can't jump down even lower because, like, let's just say we entered on the 5-minute. 5 to 1 is not that, it's not that, like, divisible. I like to go more, like, if it was a 1 hour, for example, I'd jump down to, like, the 3-minute for this. Just so you guys have, like, some context there. But anyways, we're looking for divergences, and we're looking for the strong rejection. Now, there's 2 ways that you can enter this, okay? The first way is anticipating your SFP on a larger time frame and front-running it, okay? So let's just say that we're going to go, let's go on the 1 hour now. Forget the 1 minute because it's not the best example. I use SFPs when I'm trading, or when I'm scalping, but it's a lot easier to see on the higher term time frames. So let's just say this is our SFP level, and price comes up and it gives us that rejection. Okay, let's actually make it higher than that. Actually, let's draw it out. Let's see if we can do this. No, I'm not drawing it. That takes too long. Okay, whatever. Price comes up. Where's my brush? Price comes up. Candle is here. Price wicks. And that's our candle. Okay? So there's 2 ways to enter. One is anticipating that this is going to be an SFP on the hourly time frame. Right? You can use my tutorial on using multiple or 2 or more time frames, but mainly 2 time frames to execute this. So you have your environmental time frame and you have your executional time frame, right? So In the event that we are going to anticipate that this is an SFP on the hourly time frame, we're going to maybe jump down to the 12, see what's going on the 12. If when we're actually entering, we're going to go even lower on the 3. You should be able to see divergences on the 12, on the 6, on the 3, on the 1. Even on the 1 minute time frame, you'll be able to see it. Now, the way that you can get you can be very confident with how you enter, especially on the 1 minute time frame. You remember, you're waiting for SFPs, right? The overall context right now on the hourly is we're anticipating an SFP. So on the 1 minute, when you start to see these divergences, this is what you're looking for. We need the divs. We need the money flow div if possible. We need the VWAP, cool. But something I've never really talked about in our market cipher B is the RSIs. Now, for those who don't know, the RSIs, I don't really use them too often, but this is good because it has the stochastic RSI and the regular RSI, and that's these lines over here. Let me get rid of like literally everything else so you guys can see it nicely. So these are our RSIs, okay? Now, I don't really use them for divergences or whatever. You can, but I don't. What I use them for is to see whether they're tight like this or whether they're spread out. And what you want to know, really, just the bare bones basics of it, is when the RSIs are split the way they are here, it's not really a strong move. It's not a strong, nor is it a sustainable move. What you want to see to have your confidence and to have like a definitive direction is the RSIs together. So what you're looking for when you're getting your divergences, now that you guys can see that these are the RSIs, I'm going to turn everything back on just for maybe the new people that don't know. Let's turn that all back on. So what you're looking for when you're exactly looking to enter and you see this is you want the RSIs to be tight the way that they are here, because it is like a strong sustainable move. Like there's power behind it. We'll call it that for lack of a better term. Okay, so that's an important thing. You want to see that. If you don't see that, it doesn't necessarily mean that there is no trade. But again, like the more of these things that line up together in confluence, the better. And of course, it helps as well if we have like levels at a certain point, right? So let's just say we have like a fib right there, and there's our golden pocket. It also helps to have that. That's TA. That's another video as well. But that's what you're looking for. You want the RSIs to be tight. Now, if you decide to front run it, which you can, just know that number one, it is more risky, obviously. Number two, it's better to have a looser stop loss when you're front running it, because you don't know how many divs this is going to bring us. Like, look how thick the money flow is here, and look at how, for example, in the same wave, like for the ones that have been around, you guys know I like to see big waves, right? I don't like to see divergences on the same wave, though you can. I just don't prefer that. And you don't know if, for example, we had a red dot and then we had this green dot, which gave us the high, right? This is this was the main divergence, but we don't know if this next green dot is going to come and do this, right? We don't know that. And then maybe this green dot would have came and done that. I don't know, right? We don't know. So when you're going to front run it, or you're looking to front run it, you need to keep in mind that you need to have a little bit more of a loose stop, okay? And again, if you're anticipating it on the 1 hour, then you're going to be entering on your executional time frames, and you're looking for divergences across the board, but you have it in your mind. You're looking at short. It crossed your swing failure pattern, and it is what it is, right? Another thing I forgot to mention, and this kind of goes without saying, but when we were defining SFPs, if this happens, like, this is not an SFP. Okay, it's not an SFP. It has to cross the line. It has to. It's the only way it's defined as an SFP. Doesn't mean that there's no trade there, but it is not a swing failure pattern. And the reason why swing failure patterns even happens, guys, is because, keep in mind, there is liquidity. This line we already identified as our SFP, right? That means that anybody that was short, not anybody, but a lot of people that were short from this point, from anywhere here, let's just say literally anywhere here, short, anywhere, their stop loss is above this high. So what is the market maker going to do? The market maker is going to shoot the price up, hit all of the stop losses, and then reverse price back down. Keep in mind, market maker's job is to make you lose, right? Anyway, so just want to say that it has to cross the line to be an SFP. So if you decide to front run it, you need to have a looser stop loss. Congratulations, you front ran it. Amazing. Now let's talk about what's the safer and easier approach and how we can go about trading it, okay? As soon as you see a potential SFP and prices coming up, I'm going to show you what I do if I'm not front running it. You jump on the 1 minute, okay? Okay, yeah. You jump on the 1 minute. I'm just going to keep drawing it. So you jump on the 1 minute. We see price slowly coming up to this line, right? We have a candle here, candle here, candle here, slowly coming up. These are the ugliest candles ever, but that's okay. Next candle we have on the 1 minute time frame, let's just say, looks like this, right? We have our SFP level, so it's a very clearly defined level. On the 1 minute time frame now, we know that this is not an SFP. Okay, this is not a swing failure pattern. But does that mean that it's not gonna go down? And does that mean that it's time to long? Well, no, we're only on the 1 minute time frame. So what do? Let's jump to the 3. Now, obviously, your candles are gonna look different on the 3 minute. So let's get rid of all of these. Now, let's just say our candle. Remember, now we're on the 3 minute. So we got one like that. Second one comes up and closes. Second candle is now closed above the 3 minute. It is no longer an SFP on the 3 minute time frame. We jump to the 5. 5 is going to look probably similar. Let's say 5 closes above. Okay, we jump to the 10 or the 15 or whatever time frame you want, right? Now we're going to, and so forth. You keep moving up the time frames until you see what you want to see, which is the body closing below the level. So remember, the 5 was like this, it closed. The 10, let's just say like this, closed. Now we're on the 15 and now we see this. Okay? Let's just say now we see this. The 5, the 10, whatever, they closed above it. 15 could not close above this level. Let's just say that 15 does. You go to like the 30 minute and you're looking for this. We want to see a body closing below the level on whatever time frame it is. As soon as you see that, your swing failure pattern is confirmed on that time frame. What do? Keep in mind, this is the approach. You're not front running it. So risk doesn't have to be so high because you have a very clearly defined exit. You put your stop loss over the high, even if you enter from here, right? What's the percent on this? This would have been whatever, 0.75% loss, and you can enter. But you have to wait. I mean, you could front run the close. I don't believe in like, oh, wait for the close when people say that. But you need to just make sure that this is going to close below the line. So, and this again, guys, works for all time frames. So let's just say we're on, like, let's say it was a daily SFP, right? Well, the daily is not going to close until the day closes. So does that mean that you can't enter the trade? Like, I mean, if you're going to front run it, cool, you front ran it and you were successful. But if you're not going to front run it, then let's just say that this was an SFP, right? Let's just say that this line here, let's say it was like this. Actually, let's say it was like this. Pretend this is an SFP and we're on the daily time frame. Now, daily, a lot of there's a lot of movement that can happen on the daily, right? I don't know what this percent difference is. Okay, this is still not that bad. But let's just say that it wicked all the way down here and there was an SFP and it literally came all the way down here, okay? Keep in mind, if you're doing it the non-front running way, I'm talking to you now, and then price closes somewhere up here, let's just say, well, this is a 9% like risk that you're going to have to put on. So this is something that you're going to have to account for if you're trading SFPs on the daily time frame and you're not front running. If you decide, no, I'm going to wait for the close, as soon as the candle closes right over here, the stop loss has to go below that low. Okay, so swing failure patterns are they're one of my favorite patterns to trade, not only because it's rewarding anticipating them and not falling to the market makers' tricks and retail, like just gig-alonging when they see price going up or super shorting when they see price going down. It's very satisfying to be able to identify it, but it's also a very I really enjoy trading SFPs because it gives you a very clearly defined stop loss. And I can't speak for everybody. I can only speak for myself, but I don't always have a very clearly defined stop loss when I'm trading. I have what in my mind would be considered invalid. Yes, and I break up my stop losses as well, so it's not always just one stop loss, and if I hit, it's game over. Sometimes I'll break it up into like 2 or 3 or 4. But with SFPs, because they have a clear definition, which we defined in the beginning, and there are clearly objective rules for them, you have a very clearly defined low. No matter what, if price comes and breaks this level, then your idea is wrong. It's not ever going to do... It's not... If this is your SFP... If this is your SFP level, and then price does this, and you get in, it's never going to do this. Or it's never going to... If it is a correct SFP, it's never going to come up and wick again. It will never do that. And the reason why is, remember, you guys need to think like a market maker. Think about the psychology. What is happening in an SFP? All of the stops are above here, right? This is all liquidity. If all of the stops are here, anybody that's short here will get stopped out, and then price will revert. But what happens? At the same time that these guys are getting stopped out, when price is super pumping, what happens? Everyone's like, oh my goodness, what are we doing? Like, price is pumping, I need to long, I'm going to miss the move, Bitcoin to 100K, whatever. So market maker will shoot the price up, wreck anybody that was short in this area because their stop losses are here, while at the exact same time, trapping all of these longs and then bring price back. And you'll see them with the vector candles. And again, guys, vectors are my #1 actual favorite indicator. I only use Traders Reality main and Market Cipher B, but specifically vector candles, I love them. That's my favorite trading term. You'll see it. Like, your SFPs will almost certainly be vector. Actually, I'm not even going to say almost certainly. It will always be a vector candle because that's what's going on within the candle. That is the psychology behind the movement. So it's important to understand what's happening when you're trading, not just trading just to trade. We don't want that, right? It's important to know why the price is doing what it's doing. Okay, I'm going to take a quick 10-second break. Do you guys have any questions? If you do, you can now unmute and ask.
I have a question.
Yes.
You know what happened today, and I closed it, and now I'm looking to short half of the wick. It's about 0. Yeah. If you do the fib shit, it's 0.7 half the week. Is that normal way to trade, if you know what I mean?
I'm sorry. Can you actually just repeat the question part of it? I didn't catch what the question is.
Oh yeah. I'm looking to take another short right now.
Yeah.
Because I anticipated this for the whole day, or 2 days, I think, or 3. I don't know.
Yeah.
But I cashed the trade. I closed it at I should close it before 68%, I think. And now I'm waiting for the next short because I think this is a swing failure pattern. as you
Oh, a
telling
swing failure
about.
pattern. Yeah, let me actually go on
Yeah,
Bitcoin.
yeah, swing failure pattern. Sorry.
Yeah, let's go on Bitcoin.
And
Yeah,
I'm
so
looking at
it
the 1
depends.
hour.
So this is 100% right now. This is a swing failure pattern. This is an SFP, real time SFP right now. We're on the 1 hour time
Yeah,
frame, right? Price shot
yeah,
up. We have our nice wick. We have our nice rejection. And let's see, that's your vector candle. Very aggressive sell off. And, now we are where we are. Now, another thing to note is I mentioned that SFPs can be found on all time frames, and they absolutely can, and they absolutely work. However, the bigger the time frame, the better. And the bigger the time frame, the more of a move. Now, you guys need to also understand something. Like, that doesn't mean that this is going to... Like, okay, earlier in the stream, I mentioned price is never going to do this and wick up again. It's never going to break that. Now, it's not, but you got to understand the time frame that you're trading on. So this 1 hour time frame does not mean that we're going to go now because we have an SFP on the 1 hour. Doesn't mean we're going to go down to 18K, for example, right? Like, so you need to be able to use all of your confluences together with your TA, with your other indicators, with our EMAs that we've talked about, with your vectors down below that we've talked about. We're looking for whatever. But this is how you're going to trade SFPs. But to answer your question in that you're looking for more shorts and stuff, I mean, yeah, man, I would be too. Because this is a clear-cut SFP, and it's not... I would not be surprised, and no one in my Discord anyways should be surprised if price, did that. Meanwhile, everyone will start panicking and what the hell's going on and da-da-da, whatever. And especially if we come down to these lows, which, everyone again in my Discord, we've been talking about, we've been eyeing for quite a while. There's liquidity here. So when if and when Bitcoin drops another 12, 13, 15% and comes and hits this level, when everyone's panicking and is saying, oh, Bitcoin's crashing and going to zero, well, we're just saying, like, that's where it's right in front of you. It's literally painted on the screen. So there's no surprise to it. But you're using this as a setup, like a trade setup in confluence with your other indicators and your other confluences and such. But that's how you can enter it. And so now, if you're trading based on the swing failure pattern strategy, then your stop loss has to be above this high. It has to be. If you're scalping and, whatever else, sure, cool. But then you wouldn't be trading based on an SFP. If you're doing an SFP setup, your stop loss has to be above this high. This is non-negotiable. And if we are here where we are now and your stop loss is almost 2% away, let's just call it 2% so it's easier to say, then you need to plan your risk accordingly based on that 2% risk that you have now taken on. I hope that answered the question.
Yeah.
Okay.
But the one thing you didn't answer is, would you go short on the 50% of the candlestick, not the body?
You mean like where? Like would I go short here, you mean?
Yeah.
Like, okay, so me...
A little bit higher.
For me, because I'm more advanced, I front run it. Like I didn't take this short. We're like on the stream and I was preparing and stuff. But I don't typically, I will usually front run it and I will look for my divs or whatever. So let's just say I would have gotten in like, I mean, I'm not going to say like up here, maybe here, let's just say, right? Hypothetically. But at the same time, like if you're doing it on the safe route, the safe way, I'm not waiting for 50% of any candle or whatever. Technically, you're supposed to wait for the close. So technically, when this candle closed over here, your entry would be right here. Actually, let's do this thing. Yeah, you'd wait for the close. So your entry would be there. and your stop loss would be up here, and then you would be targeting these lows, right? This is not the best risk to reward. This was a very aggressive candle, and again, I front run it, so you know, you also got to look at your other confluences, guys. Like, you know, the technical way is at the candle close, but the first thing that I mentioned was I don't like trading candle closes. I just don't. I don't know. I just don't really believe in that. So, you know, would I have entered on the candle close? Probably not. I would now, for example, like right now, right? We're doing the stream, so I'm not trading. When we're done the stream, I know that this is an SFP, so now I'm gonna start looking for entries. You know what I'm saying?
Yeah, so the safe way is to wait after the SFP and the retrace and continuation down, yeah?
It doesn't even need to necessarily always retrace. Like right now, right, in real time on the 12-minute candle, we just took 50% of this red vector. So we have every reason to believe that price is going to continue down. Now, it's not always going to retrace. It could literally just, how many times have we seen Bitcoin do this, right? Sideways, up, and then just straight down and just wreck everything. It's done that so many times. So it's not always going to give you like something like this. But my point is now that the candle closed and we have a confirmed SFP on the 1 hour, the stop loss
and the blue one.
Yeah, the stop loss has to be above this.
And the blue candle, isn't that a stopping candle?
No, a stopping volume candle. Blue is not always a stopping volume candle, but I mean, yeah, I guess it, like, I would like to see something. Let me get rid of this freaking ugly thing. I would like to see like more of a wick. You know, this is kind of like, it's subjective, right? Like this is a stopping volume candle. I want to see something more. I guess it kind of is, but it's subjective. I want to see it a little bit more than that. But because we're actually having an SFP right now, let's go and use my time frames example practically, right? So we have our SFP level that we know, right? We know that's an SFP. We can see here on the 1 minute time frame, we confirmed above it. So we would move to the 3. 3 closed above, we would move to the 5. 5 closed above. Let's go to the 12. 12 closed above. 15 closed above. All right, 30-minute time frame was our first candle time frame that we looked at that actually closed below that level. So now this is a valid SFP. Right? 2 hour decides to close below. Look at this candle. 2 hour decides to close below, that's an SFP, right? The higher the time frames, the better. The 4 hour, that's an SFP, right? Now, another thing you guys need to know is, again, and I said this in the beginning, there's SFPs everywhere, man. They're all over the place. Every single high that you see, technically, is an SFP. So it's important, before you start drawing, so many lines the way that I'm drawing all these lines right now, it's important to, be able to identify the valid ones. So zoom out, right? Zoom out, kind of draw your market structure, have an idea, right? Lower low, lower high, lower low, lower high, lower low, and we're waiting for a lower high, right? But technically speaking, if we draw that again, anything that is, anything that closes, like if price doesn't close above this level, then anything here, it can go this high and it will still be considered a lower high, right? So any SFPs that you see on the way up in this whole zone, which is a huge zone, could be considered an SFP, including this one here, right? So just because this SFP is playing out right now and it's confirming, and it's confirmed on the 1 hour, that doesn't mean that, we're not going to just dance around and then continue to go higher, maybe SFP this one, and then get them moved down, right? We could do the same with this. That's why you need to zoom out and you need to draw. Let's get rid of this. You need to draw your market structure. You need to know where you are, because that's what we're looking for. As soon as price closes above this level, actually this one here, then we have a change in market structure. And then now we should be favoring longs, not favoring shorts. So that's why they kind of go hand in hand, and we want to be looking for, you want to be looking to go, I guess, like with the trend. But it's important to be able to identify the SFPs that could happen in the range within your overall market structure. And that's why it's important for you guys to have your environmental time frame and your execution time frame. We've talked about it many times, and I always say it's way better for you guys to just trade two time frames. You know, keep it simple. Keep it very, very simple. Any other questions?
So I have yes, I have the question. So now we should jump to the highest week for the SFP.
Yeah, so you can also SFP and SFP, but typically that doesn't really happen when, like, for example, on the 1 hour we had such a strong rejection. Like, I would be surprised if we SFP this SFP. We will like start to do that when, like, if we this is the hourly time frame, but if we chill around here for like a little while longer, then I can maybe see it happening again. Right? So, you know, and it kind of goes hand in hand again with the market psychology. Like, remember what's happening during the consolidation. Like, remember what market makers doing. This is not, despite what retail tells you, this is not to give institutions a chance to buy. This is not to give the RSIs a chance to reset. This is market makers spiking price down, trapping shorts, spiking price up, trapping longs, spiking. He's building orders in this section. All consolidation is, sorry?
But should we consider the last week as a new SFP, because
This
all
one, yeah,
the
absolutely we
okay,
should.
this is my question.
Yeah, absolutely. This is a new SFP to watch. 100%. And if you watch my ranges tutorial, let's just say you're trading this range right over here, and you have your range high and you have your range low. Well, keep in mind, the range is going to keep expanding. So now where your range high would be, do I not have, let's say, RH? Right? Your range high was there. Well, now your range high moves to here. Right? So you're just expanding the range as you keep going. But yes, you would consider this a new SFP. Any other questions?
Hi.
Hey.
Hi. Can you hear me? Sorry,
Yes.
it's the first time I'm here.
Yeah.
Okay. So about the former SFP, it becomes invalidated.
This one here?
That one. Yeah.
Well, right now it's not.
Moving forward. I mean, moving forward.
Oh, yeah. Keep in mind, like, it's just swing highs and swing lows. So as soon as you take the high, you have a new swing high. So this is irrelevant. And again, that doesn't mean like that like you could maybe, if you have it on your level, I don't do this, but I mean, there's no harm in it. You could maybe write OSFP, which is like old SFP, right? For this to be here, for example, just so that you know. And then, you know, you don't like, what if right now, for example, let's see if this lines up perfectly. Let's see. Look at that. Let's just say you drew your fib or whatever, and you had a daily level here or whatever. Plus you have your old SFP that technically is confirmed. Remember, this SFP is an SFP until this high is taken. So it can stay here for 10 years and it is still confirmed until this high is taken. So maybe price comes up, hits your fib now, hits the old SFP, which is up to you if you want to keep it on your chart. And then maybe we get to move down. But the whole idea is the trade is valid until this new high is taken.
Okay, got it. Yes.
Anybody else? Nope. All right, guys. Well, that is SFPs, swing failure patterns. That is how you trade it. Again, you can front run it, and you can take the safer route, which is, as I mentioned, wait for the close technically, but I don't like to do that, but whatever, it is what it is. And it's a good trade. It's a very good trade setup because you have a very clear invalidation. And to me, for me personally, I would rather, I front run it, but especially if I was newer, I would rather have a risk to reward that is not as strong and have a very clear invalidation than, have something like this, and then get caught out like 2-3 times. Because you can get chopped up. Like, you can get chopped looking for this. Like, look at how ugly this all was. Like, all these, we have the dots here. Here we have the RSIs. You could have technically shorted here. I mean, there was no div, but we're very overbought on the 1 minute. I mean, it's the 1 minute, but we're very overbought here. Like, you could have shorted right here, and then got wrecked, and then what the hell? And then maybe you shorted here and then got wrecked. And maybe you shorted here and then got wrecked. So, for me, I like the security of having a very clear invalidation. That is something that I will pay for. I will, right? Like, when you don't get the best entries, you're losing that amount of movement, I guess, in your idea. But I would rather pay to know, okay, that was the top. This is my clear invalidation. If it breaks this point, then I'm wrong. I'll take the L, no problem, and not necessarily hit that super high risk to reward. But, I'd rather pay for the security, because at the end of the day, the game is not make as much money as you can. The game is literally don't lose money. That's it.
Hey, do you mind if I ask you one more question?
Yeah. That's why we're here, man. Ask as many as you like.
Okay, so I'm thinking out loud here. Just want to pick your brain on how you did the zooming in to front run it. So you get the SFP. You're in that area. Let's say 1 hour time frame. You go down as much as you're comfortable with, like 3 minutes or 1 minute, whatever, and you start getting dipped, like bear dipped in this example, right? So you take the trade exactly when you see 1 minute, 3 minutes. What is your thought process?
Sure,
because of course 1 minute is
yeah, no worries. So first things first is I do my TA, right? Like, I have my TA levels. I have an idea of where we are in the chart. I have an idea on where I wanna take trades, right? If I'm on the 1 hour time frame, and right now we're on the 1 hour and this is happening on the 1 hour in real time, I kind of want to see other confluences. However, again, we know that SFP is a very clear cut defined trade setup, so I'm comfortable with it. But the first thing is we want to see other levels. That's number one. When price is pumping above what could potentially be an SFP, there is no way in hell that I'm longing this ever. Right? If you miss it, you miss it, but I'm not longing that. That's number one. Now, what am I looking for? So on the 1 hour, this kind of just goes hand in hand with your environmental and your executional time frame. I don't know when you came, this is your first live stream, but if you go back and watch the other videos, I talk about it. But in short, I like, especially for beginners, pick 2 time frames, have an environmental time frame and have an executional time frame. What I like to see, and in this case, you can kind of see we have divergences even in money flow on the 1 hour. So even on what I would consider my environmental time frame, we are getting divs. Let's go higher. Let's see what yeah, anyways, we're getting divs on the environmental time frame, but let's just say we weren't. What I would like to see is the environmental time frame being topped out. So I want to see a red dot maybe up here would make me a lot more comfortable. Even now, like even still, this may not necessarily play out. I would have liked this wave to be maybe like up here. So right now, this is making me think like, okay, if we get the red dot here, maybe we'll get a green dot. Maybe we'll get like a massive div over time. And maybe money flow will continue down. And maybe we'll SFP the SFP in like a few hours. I don't know.
So you would like to see an anchor wave, is that it?
Yeah, I guess. I mean, it doesn't necessarily need to be an anchor wave. Like, I just want to see it over like this, for example, this is not an anchor wave, right? But we're still topped out, right? Like these lines are overbought and are oversold. We're still topped out. And around the same time that we're topped out, what I want to see is now I will jump to like the 12 and I want to start seeing divergences, right? Even, so the 12 like will likely be giving you divs as well. I'm okay if the 12 is topped out, similar to how the 1 hour was. And then you jump to like the 6 and then that's when you really start to see the divs, right? Like here, if the only way I'll take a trade if there's no div on the 6 is if the 6 is like super topped out and the 1 is giving me like a mad divergence and I'm not betting the farm on it. Like I'm taking profits really, really quickly when I do that. If I do that super quick, I'm taking profits. But yeah, you want to just see continuous divs on the lower term time frames, and any true divergent or any true SFP will give you those divs. Like here, so we're pumping now. I don't see divs on the 3 minute, right? The 3 actually looks pretty bullish to me. And if you're looking in the context of the rest of your time frames, 4 hour, you have nothing to worry about. If you're, let's just say you're long and you're worried about getting stopped out or whatever. I mean, 4 hour doesn't look bad. 4 hour looks like it has a lot more movement to the upside. 3 hour looks like it could also keep going, right? We have our RSIs together, which is a strong indication. Money flow is increasing. And we have some like it looks like it wants to go up, right? So you also got to think too, look at the 3 hour and look how I think the 3 hour looks bullish, but would I consider this an SFP based on the 3 hour time frame? And the answer is probably not, because if you're on the 3 hour and 3 hours are environmental time frame, let's just say, well, when you start to draw your higher highs and higher lows, right? This level, you could like it's kind of subjective, so it's a little bit hard, but like we even came down here, right? Like it could be like that. This level isn't really like, in the grander context of it, we're on the 3 hour, isn't really an SFP. Like I would consider this one to be, because it was high, lower low, or high low, lower high, lower low, lower high, lower low, whatever, right? So you need to look at your environmental time frame and kind of draw it out, have an idea of your market structure. And this is so small based on the 3 hour time frame. Like you're not really going to consider this to be a massive move down. And I'm not saying that it won't, but it's important to have an idea of your environmental time frame and do your TA and do your market structure analysis and everything else based on your environmental time frame. I can't tell you how many times like people get caught up and they're like, oh, SFP on the 5 minute time frame. And then they think that 5 minute SFP that's going to bring them down is going to turn this entire 3 hour down. Like it doesn't work that way. So yeah, that's, I don't remember the original question and I went on way of a tangent there. So I apologize for that, but that's kind of, how you want to look at it. Draw your market structure on your environmental time frame and decide like, is this a good SFP for that time frame? For the 3 hour, probably not. For the 1 hour, yeah, maybe, because we had a range here, right? And typically SFPs happens when we range a little bit. Anyone else?
Yeah, please. Do you ever use the Bollinger Band?
I used to. I don't even want to say used to. I flirted with Bollinger Bands for a little bit, for maybe 2 weeks, but I don't really use them. I won a lot of. I made a lot of money using them, and then I didn't make a lot of money using them. So yeah, I don't.
Yeah, I know. It's confusing, but today it's really mapped out, bro. This was a Bollinger Band trade, and now it's like tightening up like a yeah.
Yeah.
Put it. Yeah, you have it.
Yeah.
I put it on 4 hour, and now you see the tightening. Yeah.
I wouldn't say that we're tight yet.
No, but
No.
it's
Like this is what you're looking for, right? You want this.
Uh-huh.
This is like, yeah, it's coming. It could come together, but I mean, a lot of the times it just kind of does. It comes up and then it goes out, right? Like, but in general, for Bollinger Bands, you're looking for this, like consistent tightening. You want this. This is not what you want, right? You want like this. Yeah, but no, I don't. Maybe I'll make a video on Bollinger Bands one day, but
Yeah, it's too early today to see the Bollinger Bands right now. But the reason I took the front run the trade was because of the Bollinger Bands and the volume, money flow volume index. Has been looking like shit for 3 days, but now it's shooting up. And if we stay under 75 on the volume index, we will still have the downtrend on the RSI as well.
Yeah. I don't know really about the Bollinger Bands. Maybe I'll do a video on them, but I can't even confidently talk about them because I haven't used them for longer than 2 weeks. And you know, I have a couple, I have a couple of strategies that I have in regards to them, specifically with scalping. But I found other things just to be more consistent. But that will be another topic for another day. I got to answer K3 though. K3, what's up, bro? So he asked, what did he ask? Oh, if I have a bias on where price is going right now. Well, I will tell you this. I am long. I am not short at the moment. I have taken profits and my stop loss is at entry. What's going to happen right now? I really don't know. I haven't done any TA today. I went to an Ed Sheeran concert last night, so I was busy. But I think, you know what, man? Theory says as long as your price is above the 50 EMA on the 1 hour time frame, you should be favoring higher prices. And the 3 hour, like this does not look bearish to me. So earlier today when CryptoFace was saying that he was going short, I was like questioning it. I'm like, really? Like nothing about this looks bearish to me. Now, yes, because of this SFP. Now I think, okay, maybe we're a little bit more neutral. Like maybe we just range for a little bit because everything is pointing up, in my opinion. Like I think everything looks like this does not look bearish in the slightest to me. But you know, I don't know, man. We'll see. There's this red vector that they can come and recover. We kind of just got to see what they're going to do around this zone now because of this SFP. I would have liked to not see the SFP because it would have given me more, it would have given me more confidence now in my long. But yeah, it is what it is. What is this? We have single prints to be filled. Yeah, man, 27.4. And look at that. That is also... remember, I was saying on the 3 hour time frame, I was saying draw out your structure. Well, on the 3 hour time frame, your SFP is here. They could SFP, they could do this, they can do this one, or they can do this one. So this zone, along with the liquidity that's right up here, which we can see, right? This zone is something that they can come and grab. So for me, I still favor up, man. I'm not closing my longs and I'm not in any shorts. I might take a couple scalps here and there, but I do favor up. The only thing that makes me bearish right now is that SFP that we just did, but you know, we'll see, man. Time will tell. Time will tell. I think it looks good though. I wouldn't bet that this is going down like long term. Like here, even on the 5-minute time frame, if you're scalping, like how, in what world, please explain to me, are you shorting when money flow is this aggressively rising?
I'm shorting because we need retraces, but I'm bullish as hell.
But I need, okay, so I need you to take the word need out of your vocabulary. You cannot say it needs to do this, it needs to do that. Man, Bitcoin can be as irrational as it wants. It can do whatever it wants. It doesn't need to do anything. And believe me, I've had this mindset. I've thought the way that you just said many times, and I've gotten wrecked. And not even that long ago, if I'm being honest. I have taken the word need out of my trading vocabulary. Whoa, that was sharp. I have taken the word need out of my trading vocabulary because it doesn't need to do anything at all. So just try. I mean, I'm not gonna tell you what to do. Like you know, you're your own, you're a grown man. But yeah, that's what I would suggest. Take need out of it because it doesn't need anything.
I will consider that.
Yeah. I didn't mean to be like telling you what to do.
No.
I didn't mean that.
No, it's the things you're saying is correct. So I have to agree with you.
Yeah.
You know.
Yeah. Also, the indicator that I'm using, K3, is, by the way, I don't know how to say your name, man. I'm sorry. Otherwise, I would pronounce it properly. But the indicator I'm using is Traders Reality Main. So if you come to indicators, that's this whole indicator. It comes with all the EMAs. I have a video on it as well, and it comes with the vector candles and whatever. But if you just come on to your indicators here and you just write Traders Reality, it'll be this one here, Traders Reality Main. And then it is the vector candle zones. So if you come inputs, come over here to show VCZ, which is vector candle zones. That's what that is. So it kind of just gives you where it shows you the levels that were untapped vectors. Chaos. Okay, chaos. Got you, bro. Anyways, yeah, that's what it is. Any other questions, guys, before we wrap up? All right, I will take your silence as once again, I'm a great teacher. Thank you very much. Guys, make sure, where do I have my TP? I already took profits and the rest, I don't have any active TPs right now. So I will monitor as the price, continues to move. Yeah, I don't have any TPs at the moment though. And I think I'm just going to let it run because I'm in swing trades, I'm in scalps, and I think my bias is up. Truly, my bias is up. But we'll see. We'll see, man. We'll see what happens. CryptoFace is going short. So I've bet against him before and it hasn't turned out well. So we'll see. We'll see what happens. Anyways, guys, thank you for joining me. I'm going to wrap it up here. For the YouTube people, if you made it to the end, thank you very much. I very highly appreciate it. As I always mention, guys, we have a Discord where we do the live streams like you are watching right now, so you get to see it in real time. I'm also very engaging in that Discord. We have I don't even know how many, over 220 people now. Crazy how far we've come in like a month and a half. So thank you. I really appreciate it. But yeah, come join the Discord. We're talking all day about TA. I jump in. People ask me questions all the time, and I give updates as well. I also have, what's it called? I also have a new VIP updates channel. A lot of people have not been able to get the codes from my videos. I don't understand why. And I was supposed to verbally say them during this video, but I didn't do it. So let's go ahead and make the code right now. The code is going to be 1141. So that's going to be the code for when this video is posted. if you made it this far and you heard the code, congratulations. If you didn't, sucks to suck. But my VIP updates channel, I update you guys in real time on what I think is happening and market cipher B and whatever. But yeah, join the Discord. Guys, if you enjoyed the content, please like, please subscribe. Thank you for watching to the end. We're almost at 400 in just a month and a half, maybe just under 2 months, almost at 400 subs already. That's absolutely crazy. And to my convenience, YouTube just changed the requirements for monetization from 1,000 to 500. So I'm almost there, but I do need those watch hours. So we talked a lot about this video. If you don't understand it, please go back and watch it again. And I have a lot of other tutorials and other concepts that we touched up in this video as well, including vector candles, including divergences and whatever, which I have other tutorials on YouTube. So that was the longest outro ever, but we're gonna leave it at that. I appreciate all y'all. Happy trading. And I'll see you in the Discord.